Hey, ladies and gents, quick market update for the month of October, and more or less just kind of an overview of where we're at with the San Diego County real estate market as a big picture. So I'm not going to go into too much detail here, but we've had a number of people asking us lately if the market's crashing, if it's on its way down, if this is the peak of the market, if they should sell. And although it's a great time to sell, it's sometimes a tough time to buy right now. Let's just take a quick look at what's going on with the market as it is right now. So people are wondering if we're at the top of the market. Well, this is the sales price, the median sales price for San Diego County going back 3 years. I do have this selected as a rolling 3 months, so that this actually goes back 3 months and averages the last 3 months of data. It just makes for a smoother curve, so you can kind of get an idea of what things look like. Because if I was to show you month to month, it might be a bit more choppy, and it doesn't really give you as precise of data as if you're just kind of looking at trends. So in October, the median sales price for San Diego County for all types of properties, that's detached single-family condos, was $535,000. Now that's down from $538,000 in September and from $540,000 in August. But as you can see here, it's not abnormal, of course, for median home prices to take a few rolls. So what's ultimately driving the market here is supply and demand. So if we were to take a look right now at our active listings in San Diego County, and again, we're going back 3 years. Now, if I want to go back, let's say 5 years, you can see the trend we've been on. This is active listings. This is supply. Back in January of 2012, we had 15,000 active listings, whereas today, or I'm sorry, in October, there was 6,094. And if we compare that with October of 2016, that was 7,636. And in 2015, 8,000. So, I mean, every single year, we've been going down thousands of, or at least 1,000 active listings, more or less, based on depending on where we are in the yearly cycle. As far as new listings, it's crazy because the new listings come to the market. You can always predict at this time of year, starting actually in mid-year, June, July, it always starts to go down, and come January, boom, you always have a spike. You always have a spike of new listings because everybody wants to get that new MLS number for the new year. So sold listings, if we look at sold listings, well, people are saying, well, the market's slowing down, properties are taking forever to sell. Well, if we actually look at sold listings, so in October, there was 9,622 sales. If we look at October of last year, there was 10,204 sales. And the previous year, 9,535 sales. Considering the inventory level and that the amount of listings is far less, it's actually a higher percentage of sold listings to active listings this year than it was last year. So as far as the generalization that the market's slowing down there, I don't really see it. The active market time has more or less continued to constantly go down. Of course, the more demand there is, the less supply there is, the more buyers that are on the market. I mean, looking for properties on the market, of course, the less time it takes to sell a property. And you can see, of course, that goes in cycles as well. But nothing abnormal here, 28 days on the market, and that's total market time. So it doesn't mean that many properties, when they're priced right, sell within several days or a week or 2 weeks. But overall market time from a property's listing date to when it was closed, that's around 28 days. And that's still pretty fast, considering if we even look back to October of 2016, that was 32 days. And before then, that was 36 days. So healthy trends, constant trends going in the direction of upwards for the market in general. Now, as far as whether or not there is additional slowing down, or if interest rates or anything are playing a role in any of this, there's not too much of a change, except that we have insanely low inventory. There's just as many, well, I have to say from our personal experience, we see just as many buyers in the market out there as we have in the past, if not more. This time of year, people have been saying that they've been slowing down. Well, I think to each their own. We found this part of the year right now is actually some of the busiest for us out of the entire year. Some of the properties we've listed recently, most of them were getting 5, 6, 7, 8 offers within a few weeks. I'm sorry, within a few days of them being in the market, and that's pretty indicative of what's going on around the county. Now, I had somebody ask me the other day. She said, "Well, geez, in my area, they are seeing there's property sitting on the market for months." And I was asking what area she's in, and she's actually in a rapidly gentrifying area. And what I notice in several of these areas is as prices go up higher and higher than faster than people expected, sometimes people tend to overprice properties. So I mean, even in highly fast appreciated markets, we still need to be reasonable on pricing and make sure that it's still within within a margin that makes sense, because it has to appraise and a number of other things. So if somebody's expecting that a property is going up 10-15% a year when it's only going up 7%, which is still incredible appreciation, then that property is going to tend to sit on the market longer and possibly sell for less. So overpricing is not the answer to getting more money for properties. Typically, it's actually pricing it right so that there will be that competition coming and swarming to that property and ultimately getting more offers. So anyway, that's just an overview. That's our perspective on this. As far as job growth, interest rates, the economy as a whole is relatively healthy, and unless there was some sort of, the way I see it, unless there's some sort of national or local or international calamity or natural disaster or something, what is going to disrupt the natural supply and demand of a market? And with the exception of those sort of some economic shaking up, interrupt, or a major earthquake or something else happening, maybe with national security, I don't know what would change the fact that we have many more qualified buyers looking to buy properties than we do sellers that are willing to sell. And as long as construction costs are very high, and as long as it takes a long time to get projects approved and actually get new construction and increase inventory out there, then I don't really see that changing in the near future, unless there's some drastic changes. And one of those changes could be interest rates, if interest rates take a tremendous leap. But also, if we want to look at interest rates, they've been saying we're going to raise rates for years and years and years, and that we are up a little bit compared to where we were in the summer. But as you can see, still we're actually about where we were last year. November 17th, 2016, we were at 3.94%, and October we're at 3.94%. So no major change there as is right now. Could there be in the future? Absolutely. But also, if you look back historically speaking, 4%, 4.5%, even 5% is a relatively very reasonable rate. And the way I see it is, even if we were to lose 50% of the buyers out there, buyers, I'm not trying to diminish your value, but if you were to lose 50% of the buyers on the market, then there's still enough demand to continue growth in the housing market. Might not be at the same pace it is, might slow down. People might see property sit in the market for several weeks or a couple months, but still, relatively speaking, that's pretty healthy. But even then, that's assuming a major change in interest rates or public sentiment as a whole. So maybe, I don't know, maybe if there's some sort of national trend that catches on, that people start looking at homeownership as a bad thing or a horrible investment, and people get emotional about these things, that could cause a difference as well. But ultimately, still, people need a place to live. So what's going to happen then? Well, if people stop buying, people still need to rent. And if people are renting places, what's going to happen to the rents? They're going to go up higher. And ultimately, what's going to happen to the prices? Because now landlords can demand more money from a property, and they can sell it, showing how much that property can generate. What's ultimately going to happen to the prices? They're probably going to continue to go up. So unless there's some severe shaking up in the supply and demand aspect of things, I don't see a whole lot of changes. I wouldn't freak out about anything. Even if the market slowed down, it would take a tremendous amount to cause it to crash in any way. So that's at this current time, based on the current information we have right now. Whether or not something might change in the months to come is still to be foreseen, but I'm just going off of what I see in the data, And if you have any questions or you think differently, we'd love to hear your opinion and talk further about it. So feel free to reach out to us, and I hope you found this helpful.